Hey everybody, welcome, good afternoon, good evening, wherever you're logging in from. The market's moving today. Maybe not as much as I'd like to see. Granted, I would, I'm a big fan of seeing those monstrous swings all over the place. But for the most part, not too bad of a day. And lots to talk about. Euro's in a really interesting spot. And we have a couple other things that definitely want to take a look at. But before we do, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for our email newsletter list. You'll be notified every time one of these videos comes out. Along with that, in the email itself, we talk about a bunch of stuff that we don't have time to talk about in here, and that's going to be everything from stocks, crypto, options, you name it. If it's setting up, it's going to be in there to take a look at. So make sure to sign up for that so you don't miss that ever again. Of course, along with that, click on the live trading subscription and trial info, where you can sign up for a free 3-day trial in the room. You can hang out with us in the live trade room for a couple days, see what it's all about, ask some questions, and just generally see how we approach the markets. It's a really good way to get a hands-on look into how we approach the day every day. So first off the bat, let's take a look at the news before we get into everything, because I forgot to do that yesterday, and obviously the news, although there wasn't much going on today, I want to make sure that we cover this first. So first off, right out of the gate, the news for tomorrow, we do have quite a few things going on. You'll notice a couple problems, though. There are no US-based news announcements. Well, 10:30 is inventories, but that's really it. Before we jump into all that, let's go in and take a look. So the UK, out of the UK at 4:30 tomorrow, we have the CPI year over year for March. It's forecasted at 2.7%. At 5 o'clock out of the Eurozone, we have the year over year CPI for March, forecasted at 1.4%. Out of Canada, at 10 o'clock, we have the Bank of Canada Monetary Policy Report and the interest rate decisions. If you're trading anything related to the Canadian dollar, or even a little bit of crude oil's got some other things going on, obviously, with the inventories. But crude oil and anything that, the Canadian dollar might have a relatively big impact on, you might find that moving around quite a bit tomorrow with the interest rate decisions. They're forecasting 1.25% unchanged from the previous. Of course, crude oil inventories tomorrow at 10:30, forecasted at negative 1.429 million. Previous was 3.306 million. And then later tonight in the evening session, 21:30 Eastern out of Australia, the employment change for March is forecasted at 20,000. Now, when we're looking at the crude oil inventories, one thing that I always like to take a look at is the API report. The API report doesn't come out until 16:30 on Tuesdays, so you got to keep an eye on that because it will sometimes give you even more information than the inventories themselves. So definitely something you want to take a look at with the API report coming out a little bit later today. Now, taking a look at the charts, the euro is pulling back to that major area of support, and we picked up on this early in the live trade room, where we've been finding this very common trend over and over and over and over again, and it's something that is hard to ignore. You'll see I have it marked here: engulfing continuation reversal bar. Well, what does this mean? Well, the euro recently has been forming an engulfing candle, a continuation candle, and a reversal bar. If we look backward, an engulfing candle, a continuation bar, a reversal bar. Go back even further, an engulfing candle, continuation, reversal. Seeing a little bit of a trend here? Yeah, engulfing, continuation, reversal. We're seeing this very frequently, over and over and over and over again, and guess what? We have another one, engulfing, continuation, potential reversal. And what makes this one so much juicier is that the reversal bar is coming into the major level of support retest. This is the level we were talking about yesterday at 24.010 that we broke through, right? Whenever you have that stereotypical breakout of a level of support, you've got that line coming across the way right here, and you have the breakout candle, and that breakout point is about halfway into the candle like we had back here. That is usually one of the better looking of the breakouts, especially for the market to come back and retest. The markets love those kinds of bouncing areas, and we are now back. And not only are we back at 24.010 for just a structural buying area, but we also have a candle structure area with the engulfing continuation reversal, the ECR, if you will, that we have setting up in the exact same place. So definitely something that I want to pay attention to in this area. In zooming into a faster time frame, obviously we can see that this area has played a pretty big bouncing role. Very nice move there, nice move there. Pretty good move there, finally started breaking down, even used it as resistance for a little while, and then finally pop back up above it. So looking for that kind of bounce back on the faster time frame for a little bit of a pullback now that we have that continuation back up. A lot of traders will wait for this rally right here to prove, because again, these 4-hour levels are, think of them as more of like a zone, if you will. A lot of traders will wait for that good continuation rally to the upside and then look to buy into that pullback to push the market higher. So, you know, in that perspective, we've got a lot going for the euro here. Not only do we have structural support with horizontal support and resistance, but we also have a candle formation, and it's the bottom of the wedge, as if that wasn't enough. So we have everything stacking up in the exact same place here, looking for continuation to the upside. The one caveat that I do have to this is that we missed the top of the wedge. A little bit of an undershoot there. They tried coming up to it, they missed it by just a little bit, and they came back down to the lows. And sometimes that can be a precursor to a little bit of an overextension to the downside. But with everything stacking up in this exact same area, it's really hard to ignore the possibility of buying opportunities down here to push the market back up. So outside of that, the euro is looking really good. We have a very interesting type of candle formation continuation. The ECR bouncing off of that 24.010. We'll have to wait and see if they want to close this out. We got another 50 minutes, and so far it looks like it's going to be holding true again, even though it did pull down a little bit further. That just basically offered up better opportunities to get in at a better price. Over on gold. Gold, for the most part, is still range bound. We're having a really, I mean, we're just having a heck of a time around this 1346.6. And that said, we're just having a heck of a time in general on gold. It's not moving. It keeps getting stuck inside this same spot. It tries breaking out of the highs, fails. Tries breaking out of the lows, fails. The one thing that we do have going for gold is simply the fact that it broke to the downside into support with the rising wedge bottom. This is one that we drew up yesterday. Honestly, I wasn't that sure about it. It was one of those where it's like, for lack of anything else, we might as well throw it on there and see if it'll give us something. And sure enough, that's where the gold market decided to bounce. Now, it did also fail to close underneath that previous swing, kind of denoting to a little bit of a trap at the lows, and as well as a moving average test and rising wedge support. So a couple things kind of happening there for that reversal back to the upside, but just chopping around this 1346.6 area, making it really tough for traders to get much done. Arguably, we do have a small level of resistance coming in off of the highs here on gold at 1350.2. Minor area. I'm not looking at this as a huge level, but the fact that we had that attempted break on the highs and it failed and rolled all the way back down again, the sellers who tried to kick this move off lower will likely, at least on the initial attempt, try to defend their positions, but I doubt there's many there to really do a whole lot. It is range bound though, so you might be surprised. We might just get stuck inside this for a little while. Another one where if we go into the 5-minute chart, you know, zooming in a little bit faster here, we're looking at a 4-hour chart initially. If we look at the 5-minute chart, we can see that this level has been no joke. I mean, it didn't look that great on the 4-hour chart, but look at this bounce on the 5-minute. They finally came back, slammed through it, used it as resistance. Beautiful drop, and they tried to drop it, failed, and then they used it as support, and we're off to the races again. So by no means am I interested in taking this level off the table. It is a huge level of support or resistance. It's just right now it seems to be kind of the middle ground, and when you're in a range, really don't like trading around the middle. It gets a little bit choppy, sloppy, and that's exactly what we're seeing here. So fingers crossed we can get a little bit more bull rallying to the upside to get away from some of this stuff. The upside objective, of course, being at 59.4 if we can break 50.2 to see if the buyers can come back to kind of retest the inside swing back here. With that amount of failure from the last time around, wouldn't be that big of a surprise to see them maybe front run it a little bit, and that's exactly where the resistance is anyway. So that is kind of the location of interest. So going into tonight, into tomorrow, and maybe even in the next couple days, looking for the buyers to try to catch the breakout to the upside to see if they can make it up to that 59.4. On crude oil finally made it down to that $66 area, but it ran into a little bit of a problem. The $66 area, it just kept missing it over and over. And if you're part of the newsletter, I was talking about in the newsletter where we have this situation where every time you run into this situation where you have a specific level, doesn't matter what the level is, but price comes down, misses it by a little bit, misses it by a little bit, misses it by a little bit, and it just keeps kind of dancing around that level, never hitting it, but just pinging just off of it. A lot of times that can give you a big clue that by the time it does actually test it, it might go a lot further. And that was exactly what we had today. So we were originally looking at that $66 mark, but the fact that it kept dancing around that area, this was the $66 mark, kept missing it, missing it, missing it, missing it. Started talking about how there might be a little bit of a larger breakdown. I was hoping for a breakdown to 65.32. Didn't quite make it all the way down there before bouncing back up again, unfortunately. But that is a good clue, and that kept potentially a lot of heat off the table if you were trying to trade that area. You didn't have to sit through a 50-cent drop before it started coming back in your direction again. So it's definitely a good clue and something to keep in the tool belt. For the most part, though, we're not really adding any new levels of support or resistance. We're still just kind of playing around the 66.24, playing around the 66 area, but again, I lost a lot of confidence in that 66, looking for 65.32 in the overnight session. The inventories and the API report are later today and tomorrow, so that can obviously throw a lot of these levels off. Doesn't really... you run into these situations where when fundamental news comes out, it'll shove the market all over the place, and it can get a little bit crazy. So you want to pay attention to when news is coming out so you don't accidentally get caught up in the wrong place at the wrong time, but definitely a really interesting location nonetheless. For the most part, as long as we stay underneath 66.24, I am looking for the sellers to continue their drive lower, maybe looking for a 3-push wedge low of sorts, and that, if we can get it to pause for a little while, might line up really nicely with that 65.32 for a great area of support, if it can get down there. Drop that out of the way. Take a look at the S&P. The S&P is bouncing back into the top of the wedge, and the top of the wedge is responding very nicely to a level of resistance, right? The market popped up. We finally hit the high of that wedge, seeing some selling pressure coming back in. You'll notice my big red box is gone. We have broken above that, and that is because they filled in the gap from earlier. That gapping area was right here. They broke above that. With a decent amount of conviction. So the fact that they've broken above that with a good amount of, I'm looking at the Dow, with a good amount of momentum, sorry, that swing low was right there, we've kind of filled in that gap to the downside. Doesn't mean that the sellers are done, but what it does mean is that sellers are likely looking for a better price. They're not really amped up about selling into the retest of the previous swing low. They were selling the retest of these highs over here, but once that gave way, now we're looking for a slightly larger run up. So with the S&P, the big thing that I want to see is breaking through the top of the wedge and getting up to here. You'll see these two lines here. That is a stacked up level of resistance. We have a level of resistance coming across here at 27.22 3/4, but we also have resistance coming off of the 61.8% reversal area at 27.25, 75, or 26, depending on how you like to round. That's the area of big interest for me coming up, and we've got a little ways to go. I mean, we still got another 25 points to go before we get up there. It might be a few days, but that is definitely the area of interest that I'm looking at. Because it might be a couple days until we get up there, looking at current price action, we can see that for the most part, we have a lot of strength. Good bull candles all the way up, back to back to back, breaking out through the top of the wedge. Wouldn't be a surprise necessarily to see them back up on themselves before a quick snap back towards the highs. I would really like to see that high test at 22 3/4. So in the overnight session, we are a little bit exhausted up here. I'm not really a big fan of buying above a wedge high, especially an ascending wedge high. It just screams exhaustion territory. But we do have a lot of bull strength, and it wouldn't be a surprise at all to see the buyers pick up that pullback. I'm really not that interested in selling until we can get up into that 25 area. So that all looks good. Of course, let's jump over and take a look at the bonds. The bonds, again, they missed that level of support by a tick or two before bouncing back up. We are seeing more continuation to the upside. C'est la vie, as they say, right? Beautiful rally to the upside. New level of support coming in at the base of that, since they dodged that level by just a couple ticks, catching a nice springboard to the upside and looking for a potential of a two-legged corrective phase. That would be from the lows to the high and then back down from there. And that puts a price point sitting right around, you know, if we draw that over, around 146.04 is going to be the price target. Now, that said, we do have a little bit of resistance just a bit further at 09. Wouldn't be that hard to see them try to pick that up just a little bit further to try to drive the market back up. It's kind of crazy, you know, I'm looking at the chart. This is a 4-hour chart, and it looks like a 5-minute chart, even with the time scale over here. You've got 145 and then 144. It looks like how a 5-minute chart should look. Anyway, you know, there definitely does look to be a little bit more upside potential on the bonds, looking for that lift higher, at least to the measured move territory, but honestly, this whole area is kind of an area of interest from 146 up to 146.09. Likely that's going to be where some profit taking takes place, and that's going to be the primary objective for the buyers. Everything looks good there, though, aside from that. Let's see. Take a look at some of the agricultural markets. The ags had an okay day of movement. You know, I think the better movers were the meat markets. The agricultural markets had a little bit of a hard time, but looking at some of these, you know, soybeans, one big level of interest that we had today was this monstrous level of support at 1,041.5. 1,041.5. We were watching in the room this morning. We were watching the orders coming in there, and it was just spoof after spoof after spoof after spoof, constant order spoofing at that 141.5, and that just told us that very likely there's a big buyer down here who's looking to fill some positions. Whether it's Goldman Sachs, who got an order from, I don't know, Hormel or wherever. Obviously, somebody wanted some contracts because, man alive, they gamed the absolute living crap out of that level at 41.5. The area of interest that we were talking about in the room was at 40.5, and that caught a nice rally to the upside. But honestly, this is the type of situation in soybeans where we could be looking for a rally up that could sustain for days with this kind of support. I mean, look at this level. Ever since 8 p.m. last night, it hit the level, couldn't break it. Hit the level, couldn't break it. Big backup. Came back down again, couldn't break it. Came back down, trying it, just could not get through that level of support until it finally did, and that's where all of the spoofing and gaming came into play. And sure enough, right back up it went. So we're looking at this thinking, you know, obviously they have some interest in here, and with that amount of contracts to create this kind of level of support, we could be looking at a multi-day rally off the backs of this if it maintains above 1040. And honestly, even if it dips below 1040, with that amount of support, I have to assume that buyers will just gobble that up too. Depends on what the order flow looks like at the time. But, you know, right now, it's looking like soybeans might be poised for a pretty strong rally over the next few days. We'll have to wait and see, but they could surely use it. That's definitely, I mean, it's been pretty bearish for the last couple days, so it would be nice to see soybeans catch a little bit of a lift there. But very interesting price action on soybeans earlier this morning. That's really about it. I mean, the agricultural markets were fairly slow today. There wasn't a whole lot going on. Wheat had a little bit of a bull trend to kick the day off, but it tapped previous high of day and then just went crashing all the way back down to the previous low of day. Corn was just a grind fest all the way down. Eventually, what I would really like to see on corn, if I'm honest, is a backup. A backup in the sense of, you know, a corrective phase up to maybe, it looks like a good amount of support came in there at 381.25. Wouldn't look like a bad spot to find some selling pressure to attempt to shove the market back down. But the way that corn's moving right now, it's very reminiscent of the bonds. Might be days before something like that happens. So very slow moving market, really grindy. Yeah, you got to play it at your own risk. Hopefully you're a patient person, but corn is definitely on the sidelines right now in terms of speed. But you know, they do have a possibility. It's a nice bear trend. It's an extended bear trend today. Any correction against that trend will likely get sold, and the closer we get to closing time here in about 40 minutes for the ags, the better that chance gets of a quick move up and a quick move right back down again. Some of the other ones, you know, the meat markets as a whole, feeder cattle and live cattle, they both had about the same type of movement. This is live cattle here. You know, looking at the overall bull rally in the morning, led up by a really strong reversal all the way back down. But key feature here, didn't break the low. Right, they missed that low by just a tick, and as long as that one tick miss stays true, it might be 1 or 2 ticks, but as long as that one tick miss on the bottom holds, this could be gearing up for a rally back up towards those highs in the next, you know, day or two. I mean, keep in mind, it's cattle. It's not the fastest moving market in the world, but if it does start breaking down below, if it can crack that low at 104.275, then you'd be looking for a run through the low at 104.25, potentially to fill the gap. Down at 104.150, and then maybe even a little bit further to the previous low of day at 103.925. So there's a lot riding on this low holding. As long as that low holds, we should be gearing up for a rally to the upside. If that low does not hold, cattle may be for a quick snap down to fill in that gap and maybe the previous low day test before finding some bouncing. Aside from that, though, relatively not so action-packed day on my end. Had one really good trade on the stock market, but that's really about it. Didn't have a whole lot going on in the futures. I tried buying crude oil at 94 cents, and the rotten SOB missed me by just a little bit. It came down to 96. My order was at 94. You can't win them all, right? It missed me by just a couple cents and then rallied back to the upside. Unfortunately, there's nothing I can do about that. Aside from that, on the stock market, the only trade we had was on KBSF. Had a quick snapback, bought at 724, sold out at 786 for a quick 60 or so cents. Beautiful pop there. Nice trade. Outside of the futures market, not really giving us a whole lot to work with. At least the stock market was moving. I'll take it. I'll take some movement over no movement. But as always, feel free to type in some of those markets you want me to take a look at. I'll analyze those for you. While I'm waiting for folks to type in a few of the markets they may be interested in, we'll take a look at our common ones. Twitter. Twitter is catching a beautiful rally to the upside. This is what we wanted to see, right? We found that support coming off of the equidistant breakout from here to here, and that was also lining up really well with a gap fill, buying into that move and looking for continuation to the upside. We wanted to see the buyers prove it. They needed to get above this 29.71, and man alive did they ever, spiking all the way up to 30, almost 32 before pulling back a little bit. Gorgeous rally on Twitter. This is the kind of movement that we needed to see for further conviction to the upside. Now we have a really good shot at pulling into that $35 mark. Maybe front running it a little bit, you know, looking at the kind of opens of that big bear bar right there. That's something that we want to pay attention to. But I mean, aside from that, it's really hard to be upset by that one. You know, this is the kind of move that we wanted to see. We have a little bit of kind of an interesting one for Boeing. Boeing on the table, but not for good news. There was a Boeing 7, what was it, a 737 or a 747, something like that. An engine blew up and tore a hole in the side of a plane, and that is a Boeing-made product. So they're seeing a little bit of problem. Now, it wasn't the airline, of course, the airline, LUV. If you look at LUV, took a little bit of a hit on that one. But Boeing, that's the plane that kind of got tore up a little bit. So seeing a little bit of a pullback on Boeing here off of the highs. We're still holding those low ends of support at 317.39, but a little bit of fundamental news like that can definitely shake things up. So kind of an interesting location here on Boeing, getting some fundamental news, potentially bumping things around a little bit. Kind of a tough spot, you know, especially once they start kind of researching into it more after the plane lands. They start doing forensics on the plane, and they find out what happens, you know, whether it's a bolt that flew out or maybe they hit a bird, I don't know. But that type of thing can have a pretty drastic impact if it's a big manufacturing flaw. So Boeing, you got to be a little bit careful. It could be touch and go for a couple days here depending on what they find. Tesla was another one that we were taking a look at. Tesla is pulling back just a little bit, but they are correcting back up and closing potentially bullish. We got a little bit of time left before the candle closes totally, but we are getting a little bit of a bounce back, and this was the big thing that we wanted to see. Is this a spike and a pennant for continuation up, or is this a spike and ledge where the market completely fails and crashes back lower? Right now, they tried breaking out of the lows, but they are catching a bull lift. If this candle can close bullish, it is looking pretty good for a spike and pennant and another leg to the upside, at least back up to around 320s, but could be a little bit further past that as well, maybe like a measured move. Overall, though, not looking terribly bad by any means, but Really depends on how this candle closes. I would love to see it close on its high or very close to its high. Would make it look even better, especially if they can close, you know, right in on this 295. That would offer up an even better one. The big thing here is that we need to see Boeing close above these lows. I don't want to see it close underneath the lows. If it closes under those lows, it's a big problem. I don't want that. So I want a good bull close on this current candle. Let's see if we can get a little more continuation. Now, some of the other ones, what was the other one? EURUSD. The EURUSD mostly range bound. I'm just doing a quick look through some of the Forex pairs here. Yeah, thank you, Windows Update. Take a look at the pound dollar. Pound dollar caught a quick snap to the highs, but it's failing off of the high. Not a very good look for the pound dollar. Having a hard time up there, potentially even cycling back a little bit. Let's see, what's another one? Pound yen. It's okay. Right now, the pound yen, I think, out of all of them, probably looks the strongest for the bull case. The other ones are showing some signs of failure, but we are still running into the top of a channel. It'd be nice to see a pullback and then buying it off of that instead. Keep in mind, this is a daily chart. But the pound yen overall, not looking too bad. Some of the other ones, MasterCard, we were talking about. MasterCard getting some continuation to the upside. Beautiful bull continuation, and this is what, you know, this is one of the two scenarios we were talking about yesterday. Either we're going to get a pullback to the bottom of the new channel, or we're going to see the buyers try to get back above the top of that wedge, right? We were looking at a possible wedge that was coming through here. They kept just kind of grinding through the lows, not really getting a whole lot done. We're finally getting away from that a little bit, but they still have some work cut out for them. You know, we're back above the bottom of that wedge area, but they need to follow through. Primary objective, still the same place that we were talking about since we were looking for the trade in the first place, and that's back up to the highs at 183.73, but it wouldn't be a surprise at all to find some resistance around that 180 mark, because that's where a lot of that selling pressure came in. But outside of that, I mean, it's looking pretty good. Not really many other things popping up. VLRX was on the list for quite a while with a big spike up earlier. VLRX is one of those stocks that it's more of a pump and dump kind of thing. They did have a halt into a halt. Really rough scenario for some of this movement here. I mean, it had a beautiful pump to the upside, but it looks nothing more like than just a pump and dump. There was a quick little snap higher here up towards $3, then it quickly failed back off again. So when we were looking at it originally, this did pop up in the room earlier in the live trade, and we were talking about how, you know, this rally up at the time, this was a hard to borrow market. I wasn't able to short into this rally because it was showing some signs of possible, you know, just possible pump and dump type movement. Would have loved to have shorted into it, but it was not an easy one to get a hold of. Another one that was on that same boat, CHEK, also had a really, really strong pump to start the day off. I don't know why it scrolled me back that far, but had a really strong pump to the upside, but this was a cannot borrow. I was not able, you can see it right here, HTB. This is a hard to borrow. I'm not able to short. At the time, it was no shorting. There were none available, so the problem here with CHEK was that we had a gap up into a halt, right? So we had a rally up, halted, 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 halted. So whenever you have that situation where it goes bull halt, bull halt, bull halt, or, you know, however many, but then into a bear halt, that's a problem, right? That bear halt is no bueno. There's going to be a lot of sellers who are going to hammer the crap out of that thing. And that's why we were talking about, I really want to short it. I want to short it so bad, but I can't. At the time, there were no shares. Now it's in the hard to borrow category. Beforehand, it was none. So I was not able to short that after the open, unfortunately. But that's one of those scenarios where, you know, it had that quick pump to the upside. It got volatility, halted several times, and then everybody starts taking profits so aggressively that it halts to the downside. And then everybody, as soon as it opens, dumps everything. And then it just goes to town, and now it's dead. So that was a pump and dump at its finest right there. Unfortunately, was not able to short that this morning. Oh well. So I'll give everyone a couple minutes here to type in any markets you want me to analyze, and then after that, if I don't see anything, then we will wrap it up. Not a bad day overall. You know, it's nice to see some movement return to the markets with, you know, some room for the trade to work. I think the biggest problem today was simply the fact that there was no room to move yesterday. It was either straight into support or straight into resistance. There wasn't a whole lot to work with. Today, a little bit of a different story. corn is catching that little lift to the upside. I wouldn't necessarily mind finding some selling opportunities on corn, but I would really want to see it above 381 and a quarter. 381 half would be a beautiful area of interest. We'll have to wait and see. Did the margin come down on corn again? It bumped up a little bit. There's a period of volatility and they increased the margin on corn, but looks like it's still there. Just looking at this thinking it's a really nice bear trend to the downside, an extended bear trend. I would love to see a corrective phase to sell into. An 81 and a quarter looks like a pretty good hot spot. 81 quarter, 81 half, somewhere inside there. Wouldn't look that bad at all. Right about there. Drop that down. We'll keep an eye on that. All right, well, I'm not seeing anybody typing in any markets they want me to analyze, so really the big things that I'm looking for going into tonight and tomorrow is the euro bouncing off this 24.010, looking absolutely beautiful at that level, potentially a quick snapback, and, I mean, picture perfect. I mean, literally, just picture perfect. We had the engulfing, continuation, reversal. The ECR right off of 24.010, bounced right back up. I mean, I can't ask for much better of a setup than that. Just followed it to the T. So we still have another 27 minutes or so until this candle closes. Might, you know, might give you a little bit of a bouncing area to give you something to work with if they can pull back. Hey, Noreen, how's it going? From London. I hope the weather's better for you than it is for me. It's been snowing the past couple of days. It's driving me nuts. It's April. What happened? E-mini futures and Bitcoin. I like it. I like it. Yeah, that's one thing, you know, trading so many different markets. One of the big things that I found is having access to a lot of different markets allows you to make wise trading decisions. One of the big problems that I find when I focus too much on a singular market, which there's nothing wrong with it, you know, there's nothing wrong with having a primary focus on one market. But for me personally, at least, I find that when I'm too focused in on one market and that market's doing nothing, you start ending up forcing trades a little bit, you know? You run into a situation where it's, okay, well, it looks okay, I guess, you know? Does it fit my rules? You know, kind of, sort of. And you take the trade anyway, ends up being a loss, and it's just more of a pain. By having more options, that allows me to say, okay, well, crude oil looks like crap today. I'm going to look at the stock market instead. You know, or the stocks really aren't moving a whole lot. Let's look at the agricultures. If they're not moving, we got Bitcoin. We got all kinds of different things. So I'm a big fan of trading a lot of different markets. I'm not necessarily trading every single one of them every day, but having that availability, I think, is a really, really big part. But E-mini futures, Bitcoin, you know, they're usually moving pretty well, but there will be those days where you'd rather watch paint dry, or it's pretty much like watching paint dry. Weather's going to be great from tomorrow. Nice. Send some my way, yeah? It's a train wreck over here. All right. Well, yeah, so, like, you know, going back over kind of the game plan for tonight, the big setups that I'm really keeping an eye on are on the euro, bouncing off of 24.010. More so looking at a faster time frame. You know, there are a lot of different ways to find potential areas of interest, whether you're a faster time frame trader, slower time frame trader, regardless. You know, looking for a bounce up and a quick pullback to buy when it re-enters that zone again. Could be buying off of that same level. I mean, any of those. Or, you know, buyers are already in on the trap low. It's hard to ignore that. This is definitely a major area of support, and the fact that it's getting that exact bounce area like we've been talking about, I mean, it's not a surprise to see it working out this nicely. The only other one really on the radar right now, for me at least, would be corn at 381.25. I really want to see what the reaction there is at 381.25. And the masochist side of me wants to see soybeans go back down to the lows to see if they want to keep gaming those orders. It would be really fun to see if they can kind of punch them around a little bit at 10.40. Yeah, Bitcoin is one of those markets that, man alive, when they hit the gas pedal, they're gone. I mean, that thing's a Ferrari when it wants to go. And then when it's dead, it's a, you know, it's the Miata parked in the back. It's taking its time. But, ooh, man, I love Bitcoin when it's moving, that's for sure. All right, well, that's going to do it for this one. You know, later today at about 16:30, that's when we have the API report coming out for crude oil, so make sure to take a look at that. It'll give us a good heads up on what to expect for tomorrow's inventories. You know, aside from that, the big ones we already kind of talked about. Corn at 381.25, and then a pullback on the euro if it wants to pull back. Otherwise, you know, most of the move might already be done. But the next pullback and a secondary leg up would look pretty good. So, aside from that, enjoy the rest of the day. If you have any emails or anything, make sure to send those to me so I can get those answered and back to you as quickly as possible. Of course, to make sure that you don't miss this again, if you missed a couple of them in the past, subscribe to the YouTube channel and click the little notification icon, the little bell icon there. It will notify you every time we go live. We go live Monday through Thursday at 1 p.m. Eastern Time, and we cover all of our favorite markets like we're doing right here. So, that's going to do it for today. Hopefully everyone had a great day, great morning at least of trading. The trading day is not done yet, but for me it is. I'm probably not going to have anything else going on, especially not with crude oil missing my order by 2 cents. That's I'm done. I'm done. Thanks, crude. I'll come back tomorrow. But good day of trading overall. Have a great rest of your day. If you have any questions, like I said, send me an email. Don't forget to subscribe. Click the notification. And like we always say, it doesn't matter what market you're trading. Always make a plan. Trade the plan. Follow those rules, and you'll be just fine. Until the next time, we'll talk to y'all later.